Hello traders, Douglas here. Today we're going to be reviewing the ES on August 19th. We're going to be using the TTW Tradefinder to pick the majority of our zones. We're going to take a look at it on a standard 1-minute chart, how that compares on the NinjaTrader chart. And let's get right into it because this is a little bit of a tricky day if you have unrealistic expectations of any indicator. All right. So, quick review as always, the TTW market volume stop, these squares, there'll be white squares on the sell side sort of, so that's actually telling you that it might have exhausted, so you might buy. There'll be red squares up top. When it buys up, it might exhaust, so that means you're looking for a sell. So red squares, maybe sell, white squares, maybe buy. All right, you can change the colors of the squares if you want, but remember, all this is doing is indicating zones that are potential zones of exhaustion. There is nothing that exists that can tell you, click here, make money, click here, make money, never lose. Okay, so setting those expectations, let's get into it. So at the beginning of the day, 8:32, we get these white squares right here signaling a potential zone of exhaustion. So maybe we should be looking to go long. Now let's take a look at the chart. And if you look at the bigger picture, oh my goodness, that is a down day. All right. So, but on the short term, we are moving up. Okay. Now I'll tell you this is VWAP from the open. All right. That's what that is. This thicker one is the 50 EMA and this thinner one is the 9 EMA. I always say this too, there's nothing magic about these EMAs. These are just sort of my zones to measure where price has pulled back to and what it might be doing in the trend. Okay, so it's just helping us visualize some things and we're moving up. So this is looking like maybe we could be potentially changing the direction of what's going on here, but that's a pretty powerful downtrend right there, right? So we're cautious for sure. And these white squares come in at 8:33-ish. So that's at about the bottom of that. I don't know about you, but it'd be pretty difficult to just pop in here, but that's a nice little candle to try to take some action. We might be going up. So this isn't the worst place to trade in the world. It would definitely work out depending on how long you held it for. These little things right here, these are dynamic, what they call dynamic icebergs. So they're icebergs that executed in multiple places. Like it's one iceberg, but it's executing in multiple places. All right, so we look to those for potential action as well. And you get these layers in of 3 sell icebergs. They're not very big, easily could be run over, but that's a caution, a caution signal. And we kind of double top out here and collapse. So, if your bias was down, you should definitely be looking potentially off of this or anything that happens after this. But we're just looking at TTW today and it doesn't give us any of those market volume stops up there. It does give us these little guys. So these are warnings that a large area of liquidity have popped in. And so see that it says 578. So that is just warning me that this red line just kind of popped in out of nowhere. A very small one happened here. You got filled immediately. So if you were down bias, this is a cool little spot to try to get short because you've got some sellers just popping in, doing their thing. Okay. So that would help you catch some of that. Now, this is really what I wanted to show you. I do not lie to my viewers. So you get all these volume stops and no action, right? No action to the long side, okay? So this is not uncommon with a major downtrend. You're going to get this. You're going to get these large areas, and then it's just going to keep going because you can't really fight what the market wants to do at the end of the day. And there are settings. So if we go here and I've got these on 0 right now. So pullback duration and pullback change in ticks. So if I put that at like 2 minutes or 5 minutes or whatever you want, 2 minutes is pretty good. And then put that maybe at 10 ticks or 15 ticks or whatever, depending on how volatile the market is. It'll eliminate a lot of these extra ones because it won't give you another signal until 2 minutes have passed or the price has moved past a certain number of ticks. Right? So you might see this one pop up here and then you might not see another one till here. All right. It's good and bad to eliminate some of that. If you're super trigger happy and these are just causing you to want to go long all the time, then it'd be good to use that setting. I haven't decided if I like that new setting or not. Sometimes I like to see the multiple ones come in. But anyway, so price comes down, and if you're a Bookmap kid, you've got this thick area liquidity here, and then more comes in again here. Price pulls back to that spot. That's 848. Where is 848? So that's this little pullback zone here on this nice big downtrend. You're still on the other side of the 9, so your short-term trend is still definitely down. That's a decent place to go short, but again, that's not, we didn't get the signal, the market volume stop signal. So we just keep going down, but this whole thing is red all the way down. It doesn't really give you any opportunities by the chart to try to get long. Okay, remember, these are not C signal, click buy, not C signal, click, make money. Okay, you've got to be smarter than that. You've got to have some sort of structure. You've got to have a plan. These factor into your plan. They are not the only part of your plan. Okay. All right, so we come down to 856. We get this little pullback here, which I still think there's probably no reason. No reason to take that. So no reason to follow any of these volume stops. We come up, we get a little bit of layers of sell icebergs here. We get another nice one right here with the way the market was trending. You could have gone short here. I still don't like it. It's not, I would have liked to see it come back to the 50 EMA, something like that. Sometimes you have to be patient through, this is something that's hard to learn. It's hard for me is sometimes you have to let moves go. Just because the market moves a lot doesn't mean it was a setup, right? Just because the market has a big area where you could have made a lot of money if you were Nostradamus, that doesn't mean it was for you, right? And the fact that you think it's for you, and because our mind tells it is why we lose money. And that's a hard thing to get over. I still struggle with that every day. So you just have to, let stuff go. Nobody wants to leave a lot of money on the table, but that's the only way you can trade, really. Unfortunately, that's all I recorded for the day on this one. That was a short one. Really, I just wanted to show you that to show you how to avoid some of these zones. And a lot of times your structure, for instance, my structure, everything's telling me, especially after we get through this spot here, everything's telling me to just look short. So taking those volume stops long is just catching a falling knife at that point. So make sure you have some sort of plan, some sort of area where you want to be looking for trades only after it comes back to a certain zone. Whatever it is, you're using volume profile, you're using order flow, you're using Fibonacci. I don't care what it is. Just make sure that you're sticking to your plan and factoring in your indicators as part of the plan, not as the whole total plan. That's it, boys. Peace out.